we're going to close out chapter 8. So this is about this section is called preparing a post-closing trial balance. Sounds exciting. So at this point, just kind of running through the life cycle of what we've learned to do. So we've talked about recording transactions into our journal. We take the transactions from our journal and record them then into the ledger, into the individual accounts. We use that ledger to make a worksheet. From that worksheet, we can reconcile any adjustments that we need to, usually in supply expenses and insurance expense and stuff like that. And then re-record those into our journal and ledger. And from that, we can generate like our income summaries and trial balances and owner equity statement. And then from that, we'll start moving into closing accounts for the month. That's what we did last section. And now that we've closed out all these accounts, the last thing we want to do in the month is to try to make sure that we haven't missed anything. So basically, it's like a balance to checkbook situation now at the end to make sure that the assets on hand and the liabilities on hand kind of cancel each other out, or that we have the same number of debits as credits. So we have all these ledgers that have been closed out. So this is like 2 pages worth of ledgers that have all been closed. So once we do this, we calculate this post-trial balance, which is basically kind of like balancing our checkbook. So we're going to take all of our accounts that would be considered assets, so cash, petty cash, accounts receivables, supplies, prepaid insurance. Those are all debit quantities. And they'll take all of our accounts that would be considered liabilities. So that would be accounts payable, capital. And those will be summed up. And then we just make sure that those 2 totals match at the end. We have as much debit as we do credit. It's basically our final check to make sure that we haven't missed a transaction along the way. Is this okay? That is the gist of it. So to fill out this post-trial balance, you have a heading, that's the name of your business, post-trial balance and the end of the month date. You have your account titles. Again, your 2 types of accounts are asset and liability accounts. We have the account balances. We just read those straight from the ledger accounts. Whatever the ending or closing balance in the ledger account is the account or is the balance that we're going to take forward. We do a single rule, which means we're going to add down. We compare our 2 totals, and if they match, we double rule at the bottom to say that we're finished. Everything is done. It matched. Everybody cool? Okay. So the accounting cycle, here again, kind of talked through this at the beginning, but so we have some transactions that come in, record those into the journal, we post from the journal into our individual ledger accounts. From that journal and ledger accounts, we can prepare the worksheet, which we can use then to adjust entries. Typically, it's that insurance expense and supplies expense are the 2 that typically get adjusted. Once we've made all of our adjustments, we can prepare financial statements, so income statement, statement of owner equity, balance sheet. At the end of the month, then we can close these accounts by paying out whatever was due on them and dumping the aggregate money back into the owner's capital account. And then before we close out the month, We do this post-closing trial balance to make sure that we haven't missed anything, that their debits and credits line up. We don't have to worry about the these expense accounts or sales accounts, or I should say revenue accounts. Why not? Because when we do the post-closing entries, that's all about the expenses and the revenues, and all that gets aggregated into the owner's capital, which is part of the post-trial balance. So we don't need to handle any of those accounts again, because we've already done that in a previous step, and those are reflected in the current owner's capital account that we would be looking at the post-trial balance phase. Is that okay? Okay, so just listing these things again. So if you go back and look at these ledger accounts here, notice here at the final, we have these lines drawn through both the debit and credit columns, right? Yes.
Is this cycle the same for single owned businesses and partners?
So I think that if you have like a single owner and you're not like incorporated, I think that this is kind of the same life cycle. Again, not an expert on this, just pretending to be for a year or two here. But I think this would work similarly as long as it's like owned by, you know, like an individual or small group of individuals, where it's not like, you know, we haven't sold equity off in the company or something. So when we draw those lines, that just to indicate a balance has not been omitted. Which accounts go on the post-closing trial balance? The permanent accounts that still have a balance in them. So again, that would be our asset and liability accounts typically. Why are the temporary accounts omitted? Well, they have zero balances because we've already, you know, either paid them out or moved that money into the owner's capital account. So the owner's capital is reflective of all those expense and revenue accounts. And then the steps in our accounting cycle are, again, that nifty graphic that we just showed you guys. So this is, I think, considerably easier process than what you guys saw last time. Let's go and pull up our Mind tab and we'll run through the work together here. So I'm gonna get this queued up, but then I'll sit down and pause here for a moment while if you would like to follow along. That's interesting. Whatever. I was doing this earlier. So, again, the accounts that we need for our post-trial balance are the permanent accounts. Typically, these are your asset and liability accounts because those may roll over to the next month, where you may owe another business some money for some service they provided, or they may owe you for a service you've provided. That can roll over from one month to the next because you have no control over, you know, like when you're going to actually be invoiced or when they're actually going to return your money that they owe you. as well as like cash supplies will be the same at the end of the month, right? Like supplies on hand, you may use some of them, but it's not like you're gonna zero out the supplies you're holding and start over again. That doesn't make a lot of sense. Those would roll over from month to month to month, as opposed to like a rent expense where you're gonna pay that at the end of every month. So again, basically, these are just your classic asset and liability accounts, with the lone exception being capital account, because the reason we're keeping that one also is, again, that's a permanent account, but it's also where it holds all the aggregate at the end of the month for expenses and revenue. All gets dumped into that capital account, the expenses paid out of it, and any revenue generated via sales got dumped into it.
So the accounts payables are included there,
Yes, those would be your classic liability accounts.
but the expenses, because it's a liability.
Right, expenses are different than liabilities, right?
Yeah, I just,
It's okay. All right, I'm gonna move forward now. Everybody cool? So my next step, let's reset this for us. No, that's where I had to reset from. Swell.
Is he the sewer dude? Yeah.
people use.
I missed one in there. Expense, sales, expense, do, expense. Okay, so that should be everything I need. Okay. So now we're just gonna be filling out this sheet. They've gone and written the accounts in for us that we needed, because these are the ones we selected from the previous page. So I'm just gonna go and look at my individual ledger accounts to pull these numbers. So if I look, I have cash as my first one. If I look at the cash ledger, the balance is a debit of 4,900. And then next one is petty cash. So I'll find the petty cash ledger. The balance there is a debit of $75. Then accounts receivable to B. Wydell. So I'll find that ledger. Again, we have a debit balance of $13.87. Then I'll find the supplies ledger. We have a debit balance of $75 there. And then my prepaid insurance ledger, and we have a debit balance of $250 in there.
Yeah, because.
Everybody feel okay about what I'm pulling
Yeah.
the numbers from? Southside pay or supplies is a credit, 276. Nope, that's wrong. 267.
6-7.
Yeah, I know. All right. Now, if I look at the capital account, there's more than one number here. Which number do I want?
You want the bottom right?
Bottom right, the 6420. That is the current balance there. And it's a credit balance. Lord hopes if we're running a business that we have a credit in our capital account, or else we are in over our heads. And then the last is now just to total this. So if I add these two columns down, I end up with 6687 in both. And because the two columns match, I know everything is in order, I've recorded, I haven't missed anything along the way, that all my transactions were accounted for, and I am good to go and move on to the next one. Where I know that I have, I know where I'm standing. Okay, oops. There we go. And I think we're all donezo's here, right? Oh, submit. There we go. Sure. Submit it. We did it. 7 minutes. Not too shabby. Now, this, I only did the work together one. I didn't look at the other ones. Yeah,
Just like as you say.
but I looked, yeah, from the point totals on my end that I was looking at, I figured they're gonna be similar enough to where it won't be a big deal.
Yeah, the only difference is on the second, like the post-closing trial balance. It includes utilities expense, but you don't actually put it there. I think it's the only difference, so.
All right, you guys feel good on this?
Yeah.
Okay, try to crank through these guys. You have a ton of time. You should be able to finish this in class pretty easily. This seems pretty straightforward. Next time we'll be doing the review assignments. So I would even say that if you're like, let me just start cranking away on that. If I finish all this stuff and I have the time, like, I don't want to do this at home, I got time in class, go ahead and start, you know, the study guides or the masteries or the challenge or whatever you feel like starting. But that's the plan for the rest of today. You guys have any questions on this stuff so far?
No?
Okay. After this, we have completed like single owner accounting. So we'll be moving on to a new topic. And I have to look at it in a little bit more depth what that is really all about, because I'm about a day ahead of you guys right now. It is what it is, but okey doke.
How